Thousands of Bitcoin in the green again, showing us a powerful start to this weekly candle. But there is a glaringly obvious trap which many people are falling for head on. In this video, I'm going to break that down and a lot more. As you can see here, Bitcoin now opening up a second week in a row in the green, looking really positive. But there is a lot more work to do. As we came into this week, you guys know that I said this was going to be a hugely volatile week, and it's proving exactly that way. Yesterday, we had a crazy candlestick, guys. At one point on this candlestick, we were as low as 26.3 and as high as 27.4. So we wicked all the way up here, only for the bears to push us back down. But today, we opened it back up again positively, pushing the price as high up today as 27.4. Very impressive bullish momentum here in the price. But you've got to remember, there's a lot of volatile trading activity going on, and that is based on the critical event we're getting tomorrow, which is the FOMC meeting. I want to show you something which hugely shocked me. Can you see this, guys? When is the last time we saw something like this? 100% of the market, literally everybody in this market, expecting 25 basis points, a pause tomorrow at the FOMC meeting. Nobody is pricing in the 25 basis point expectation, and we now await to see if Jerome Powell is going to rug pull us. Remember, a rug pull will be if he surprises us with a 25 base point rate hike. But I feel like he's going to come out, he's going to be quite stern with his words, he's going to be very hawkish and keep the market suppressed. Remember, inflation last week, CPI and PPI were not looking too great, right? Slightly hotter than expected. He's still got work to do to bring inflation down to 2%, and he's going to want to jawbone the markets to price that in for him. At the moment, markets are pricing in a pause. And that is part of the reason why we're seeing positivity, right? Fear and greed index is sitting at 46, not crazy fearful. If we jump into the pre-market here in the US, fairly balanced ahead of tomorrow, but crypto is starting to see a little bit of a bounce. But the question is can we trust this bounce? And that's what we want to get into in this video. So let's start off by PS. Just want to take a quick moment to say thank you to you guys for getting us to 15,000 subscribers here on this channel. It's been a long, hard bear market, but hopefully you guys have enjoyed the consistency of the content, even on good days and bad days, plus weekends. If you appreciate this type of content, please do subscribe, share with friends so I can continue to bring this content throughout the rest of this bear market and into the exciting bull market. Looking at what we know caused this problem in the first place, right? It's this dollar index. If we take a look at this dollar index and bring out my drawings, you can see that we had a major breakout of trend here on the dollar index. Initially, it started when we bounced from the bottom of the channel. Soon as we got a powerful bounce here from the bottom of the channel, you can see we worked our way to the top, broke out of the range, and then just kept going. 10 consecutive or so weeks here to the upside, and finally this week has opened up slightly red, right? Just a little bit of a cooling off. And that is enough to allow Bitcoin to capitalize and see a little bit of a movement to the upside. So just like Bitcoin had 4 weeks to the downside, it's finally trying to get itself a green week. Here, same thing, right? It's just having a cooling off. And this is why I want you guys to be very, very cognizant of. This movement on the dollar index is just a cooling off, right? If you look at it, you have to give the benefit of the doubt. When they've had this many consecutive weeks of green, for it to have a couple of red weeks is not going to be the end of the world for the dollar index. The dollar index is going to want to bounce off of its EMA ribbon. Maybe it wants to call off here, the EMA ribbon will start to climb, and then it wants to bounce off the EMA ribbon to move even higher. So that's what we need to watch out for. Yes, if the dollar index wants to have 2 or 3 bad weeks moving in this direction, then Bitcoin can benefit from that. But what's the longer term picture? The longer term play here is if the dollar index doesn't lose its EMA ribbon and start heading in this direction, there's no, multi-week, multi-month positive cycle for Bitcoin just yet. So we need something that's going to move the dollar index to the downside. And what is going to move the dollar index to the downside is a notion that risk is ready to move back on. And that would be either long-term pauses in the interest rates, cuts in the interest rates, inflation showing a meaningful move to the downside. These are the things that would allow risk to rotate on. So those are the catalysts I'm looking for in this market. If I can start to see some of those catalysts, then I'm going to feel positive about the cycle here on Bitcoin. So for now, yes, I'm going to enjoy these moves on Bitcoin, but we have to understand that where we're sat right now is just this. We're just testing our weekly EMA ribbon. Now, what's going to be critical is can we actually get this weekly candle close above? Right now, you can see we're just here. Just look at that there, guys. We're just underneath the EMA ribbon here on the weekly candlestick, just closing below. But something positive is going on the daily candlestick. If we can hold where we are today, if we can close knows where this candlestick is right now, we will reclaim our daily EMA ribbon, which is really, really important. Remember, I said the same yesterday, and you saw that the bears pushed us back into our EMA ribbon later in the day after my video was posted, and we predicted that. The same could happen today, because I'm expecting a lot of volatility heading into tomorrow's FOMC meeting. So do not get caught out. I'm expecting a lot of wicking candles here where you think you're going to be up here, then you're back down here. Those dumps are very, very predictable. I mean, we predicted that yesterday. I mean, if we jump into the hourly charts, you guys would have seen everybody's getting excited by this move yesterday, and then it dumped and gave it all back again. Fortunately, we're getting a nice big move here again today. Are we going to dump it and come back to the hourly EMA ribbon back in this kind of range at 26.9, 26.8? It's very, very possible. Now, when we come to this hourly chart, you'll notice something really important. And that is that we got rejected yesterday at around 27.4. Similarly, this candlestick a couple of hours ago got rejected at about the same level, 27.4. So the local resistance on the hourly chart is sitting at 27.4. That's the key level that the bulls have to break through before we can get our next leg up. Now, where is the next leg up? I hear you shouting. Well, the next leg up you'll see on the 4-hourly chart. When we jump into this 4-hourly chart, you will remember that here, dating back to the end of August, when we had a little bit of a move to the upside, we got rejected around 27.8 to call it the 28,000 range. This cluster of resistance is going to be the important battle. If we can clear through that cluster, if we can start moving beyond there and upwards, then we can start worrying about the next price target, which starts to bring us back into the bottom of the triangle which we broke down from. So for those of you who don't remember, we were in this triangle pattern. We broke powerfully to the downside at the apex of the triangle. That then led us to fall all the way to the levels of 26.1, 26.2. So in order for us to see where is our next level of resistance, you can see it's exactly this line. What was once support, this green line, at around that 29,000 level, will be our next major level of resistance here to the upside, okay? So once we clear this battle here, let's say we do clear it, we go above here, we retest, we work our way up, then that green line is going to be the resistance right here. This green line all the way across there is going to be our next level of resistance at 29. So a lot of work here for Bitcoin to do. It's not just going to suddenly start moving powerfully to the upside. There's a lot of resistance levels, and we've got to work through them progressively. Once you get through 29, there's some resistance at 30. Once you get through the resistance at 30, then we're working towards 32, and things start to get exciting. But remember, if I zoom out to the weekly chart, I need to show you guys what the important picture is. And it's this pattern here. We managed to avoid this big M pattern, right, which could have broken down and given us some horrible price targets. Thankfully, based on this last 2 weeks, we've managed to avoid it. But there's still a risk we can just curl over and come back to the downside. In order to invalidate this bearish scenario of us breaking down and heading lower, we need to break the 2 previous peaks, which is this peak here and this peak here. So we've got to see some movement here on Bitcoin that breaks beyond those peaks. And those peaks sit at around that 31.8. That's pretty much where we got rejected. So what we need to see on Bitcoin, and it doesn't need to happen immediately, but it needs to happen over the next handful of weeks and months, is we've got to work our way in this direction, and we cannot afford to get rejected at 32 again, okay? Or earlier. We can't afford to do this. We cannot afford to even go to 32 and come back down, because then the probability that we break down even further extends. So what we need to see from Bitcoin is some sideways action, some higher lows and higher highs, and get past this 32 level. That's going to be critical here on the weekly chart. So there you have it, guys. Those are the key levels we're seeing in the Bitcoin chart. Let me know, what are you worried about in the markets? What are you focused on? Are you DCAing? Are you holding back? Personally, I'm not looking to add right now. We've got 2 crazy candles here today. Got the FOMC meeting. If we get a rug pull tomorrow, maybe I'll be looking to buy the dip. But right now, do not get put into a full sense of security with these green candles. Yes, they're good, but the reality is the data tomorrow is going to be what is key. Hopefully you enjoyed this content. Don't forget to go watch this video here on the second channel, and I'll see you in the next one.